Hello friends, today 1st February 2022, we have seen that budget has been announced by the Honorable Finance Minister Nirmala Sitharaman ji for financial year 2022-23. The budget proposals, as far as tax proposals are concerned, has been announced keeping into two objectives in mind. One is to punish the wrongdoer, and second is to implement a tax system which is driven by the technology. With these two objectives, entire tax proposals has been announced by the Finance Minister. Friends, in this video, we are going to discuss about the GST tax proposals, which are not the general tax proposals, such as reduction of interest from the retrospective effect from 24% to 18% and all such other provisions. But we are going to discuss about the hardcore interpretational issues which has not been dealt by any of the forum. So here what we are going to discuss today is that financial proposals as far as GST is concerned are mainly concentrating on input tax credit, on refund, and third is on the compliance. So out of these three segments, core issue which is arising for a discussion is the input tax credit. Friends, why I am saying that these are not the general discussion? Because we are going to discuss the fine line between the provisions. So what are those? Let us first discuss with the amendment which has been proposed under section 16, which provides for the eligibility and conditions for taking of input tax credit. This is one of the beneficial provision under the input tax credit, what we are going to discuss now. So we are beginning with the first amendment. What it says that section 16(4) has been proposed to be amended. And that amendment is that as on today, section 16(4) provides that you are entitled to avail the credit for a previous financial year up to the due date of filing of the September return or annual return, whichever is earlier. Now the amendment has been proposed whereby due date of filing of the September return has been amended, and on that new text has been inserted, which has been proposed to be inserted, is that you can avail the credit by 30th of the November. So yes, this is a welcome move which has been proposed by the Finance Minister, wherein it is in line with the income tax provision, where as per the income tax provisions, generally all the assessees need to finalize their accounting for the previous period by 31st October. So once you are finalizing your accounting for a previous financial year, so thereafter under GST, they are giving you a time period that, okay, by 31st October, you have finalized your accounting for the previous period. You can come to know that what are the credits which you have not availed or which has been availed wrongly, or any of the possibilities, or you have not reversed the credit in proportion with the taxable output supply. So all those parameters you can take into consideration, and thereafter by 30th November is a fair time period what has been given to the assessees for taking of the prior period credit of the immediate previous financial year. So that is the amendment, which is a good amendment, and we say that this is in line with the assessees, those who want to comply with the tax. So compliance has been made more stricter for the assessees to have a good system of the taxation. Friends, now when this provision has been provided, apart from this, another subsection under the same section 16 has been proposed to be amended. That is subsection 2. What is subsection 2? Friends, subsection 2 provides that you are entitled to take the credit when you are in possession of the invoice. You have received those input goods or services. The tax has been paid on it and the return has been filed. These are the conditions which you need to satisfy to take the credit. One more condition has been proposed to be inserted under subsection 2 of section 16. And what is that proposal? So it says that you need to check your credit, which is provided by auto-generated system report, which is provided as a new section 38. So what is that section 38 is needs to be understood. So section 38 is talking about the communication of details of inward supplies and input tax credit. So friends, this is a new section which has been introduced, which provides that you can avail the credit as per this section, and if as per this section you are not entitled to avail the credit, then restriction has been imposed under subsection 2 of section 16 that you cannot avail the credit. So this is the one more restriction which has been put up on the assessees. So what is that section 38? Let us discuss now. Friends, section 38 is one where details of outward supply will be updated and return will be filed by the supplier. Based on that, one data will be prepared, and that data will be of an auto-generated report, and that based on that data you are entitled to avail the credit. That data will get bifurcated into two segments. One segment will be covering the areas for which you are entitled to avail the credit. Okay, and one is that where you are not entitled to avail those credits. So restriction will be put up on the assessee by the system itself. So this is the provision with an objective of technology-driven taxation system. So what is that? It is saying that details will be provided wherein there are certain cases where if the assessee has defaulted in his tax payment for a continued period, which will be provided, what would be that period, then that will come up as an ineligible credit, though it will appear in your auto tax system. So this is the provision which is restricting you from availing the credit. Another provision is that if he is availing or he is discharging his output tax liability, which is disclosed is more in the return, but he has paid less tax, then also you cannot avail the credit. Now, friends, question is arising that there can be ample number of situations where there can be a distinguish, where, say for example, while filing the outward supply details, B2C supply has been wrongly mentioned. Okay. And then while filing GSTR 3B, he came to know that yes, there was a punching error while mentioning the figure. So then accordingly, he has reduced the credit and correct liability has been discharged by filing the GSTR 3B. So there is definitely mismatch between the output liability shown under GSTR 1 and GSTR 3B, what tax has been discharged by the assessee. But by the act of human error and assessees correctly discharging the output tax liability, why the receiver is restricted to avail the credit? So that is the second area. One is another area where they are trying to restrict your credit by such provision is that you have availed excess credit than what has been provided in the auto-populated report. So friends, there can be many situations where, say for example, while filing a return for the previous period, you have taken a less credit because you were not supposed to, your liability was not that much. So you have availed a less credit. Say for example, in your auto-populated, there was a credit of 1 lakh and your liability was only 80,000. So you have used 80,000. So what is available of that previous month, that is 20,000, you are using it for this month liability. So by this, if system will show that yes, you have, your supplier has used more credit and therefore you are not entitled to avail that credit. So this is completely a deterrent provision. So these are the cases where we feel that yes, you can put up the restrictions, but the restriction should be reasonable, should not be in the form of where it should create an impossible task for the receiver to perform it. How can you expect that receiver will find out that yes, he has not discharged the tax liability and therefore you are penalizing the assessees who has complied with all the provisions? My question is, being a government, you have all the power to form a tax system to catch those type of assessees. You have already formulated that provisions. So you catch those assessees. Why you are penalizing the assessee who has complied with all the provisions? That is the fault of the supplier. If being a government, you are not able to catch that person, why the honest taxpayer should be penalized? Of course, we understand that there are the cases, there are the fraud cases is going on for availment of input tax credit, which is a paper credit and all such things. But that doesn't mean that honest taxpayers shall be punished for that. So these are the provisions we are agreed that restriction can be imposed, but it should not be in a way which should deterrent or which should deprive the honest taxpayer from doing the business. If the credit has been restricted to the taxpayer, then it will definitely impact his business. And this is further not in line with the introduction of the GST. What was the object for the introduction of GST, friends? The object was to allow a free flow of the credit. So that is what is missing by such type of provisions, and where I feel that when they are come up with the rules, there should not be a strict rules, and the rules should provide for the provisions which should come out of such type of situations. And tax system, I always believe that should be such that you shall be put up with a reasonable grounds where you should restrict the taxpayer. You should not restrict the person who do not have a catch or who cannot catch the thing. You should not impose a task which is impossible to perform. Now, another amendment which has been proposed is under section 41. That new section has been proposed to be incorporated. That is section 41, which is for the availment of input tax credit. So what does that section talks about? That you can avail the credit, and whatever credit you are availing in your 3B, it will get credited to your electronic credit ledger, and as per the self-assessed tax system, it will be considered as a credit has been availed by you. That is fine. Now that section further says that if that credit, what has been availed, and that supplier has not discharged the tax liability, then you should reverse that credit along with the interest. And further it says that yes, you can reclaim that credit whenever tax has been paid by that person. But again, same situation, that why you are putting up a restriction? You put up a restriction on the supplier. At the first stage, you catch the supplier. So this is something which all the taxpayer, if it gets implemented, it will be very difficult for the taxpayer to comply with such type of provisions. And you should have a, I don't know how to overcome such type of situation if it will be arise. So that time it is to be seen that how you deal with such type of situation by putting some clause or something in your agreement or something like that. Otherwise it will be very difficult and it will end up losing the entire credit. So another important provision or deterrent provision, I will say, wherein subclause 12 has been proposed to be inserted under section 49. Section 49 provides for the payment of tax, interest, penalty, and other amounts. So now what is that subsection 12? Subsection 12 is starting with the non-obstat clause, wherein government on the recommendation of the council has a power to specify a class of assessees who will be compelled to make or to discharge the liability by cash payment. So there they are putting a restriction on utilization of input tax credit. So this is definitely going to hamper the businessman and his cash flow, because once he is in availment of that credit which is eligible to him, how can you restrict that assessee? Is this permissible? It is definitely going to be challenged. That how can you restrict the assessee where he has complied with all the conditions? Can you impose a restriction on utilization? So friends, these are some of the deterrent provisions as far as input tax credit is concerned. Stay tuned for the next discussions. Thank you.